As debates on taxation intensify, the effort to transition toward taxing income from wealth rather than work emerges as an intriguing policy alternative, potentially reshaping the fiscal landscape in the United Kingdom. In recent months, the discourse surrounding taxation in the UK has intensified, particularly regarding the focus on investing income from wealth rather than taxing wages from work. Labour's commitment for the upcoming 2024 manifesto asserts, "We will not increase taxes on working people," specifying that income tax rates, national insurance contributions, and VAT would remain untouched for this demographic. However, this raises critical questions about what constitutes working people and, by extension, how the government defines taxable income. A broad interpretation suggested by Treasury officials encompasses essentially everyone who receives a payslip. But is this definition too simplistic? It appears to neglect the vast landscape of self-employed individuals, freelancers, and indeed those generating income passively through investments or properties. The current narrative has spurred discussions on the merits of taxing income derived from wealth, an idea that might resonate more with the evolving economic realities. The government is increasingly under pressure to consider wealth taxes, especially as the country grapples with rising demands for public spending. Reportedly, one alternative under review is an increase in the rates of income tax applied to dividend income. If such measures extend further, this points to a broad strategy of taxing income from wealth rather than work. Passive income streams, dividend earnings, interest from savings, rental income are substantial. HMRC revealed around £107 billion in 2022 to 23 from these sources. A mere 2% rise in taxes on this income could potentially yield over £2 billion for the exchequer. Critics argue that increasing taxes on investment income could impose undue strain on those who depend on these funds for their living expenses. Business owners might react by halting dividends or reconfiguring their financial strategies in response to escalating taxation, ultimately complicating the economic landscape further. Additionally, individuals may explore ways to mitigate their tax exposure, utilizing mechanisms such as ISAs to shield their wealth. While taxing income from wealth could present a potential route to generating much-needed revenue, it is paramount for policymakers to approach this with caution. Such tax modifications may indeed appear like a de facto wealth tax, albeit one that affects a broader demographic. These are not merely the affluent. Many middle-income earners are reliant on investment income to sustain their lifestyles, heightening the need for a balanced approach, especially during economic turbulence. The notion of taxing income from wealth rather than work encapsulates an evolving viewpoint on fairness and equity within the taxation framework. It begs the question, should we not explore avenues that relieve the burden on the working class while ensuring that those deriving wealth from various passive channels contribute adequately to the economy? Fundamentally, any shift in taxation policy must be accompanied by clear communication. There also needs to be the foresight to ensure that the impact is equitable and justifiable. It becomes crucial for parliamentarians and economists alike to navigate these waters prudently, considering both the immediate fiscal needs and the long-term repercussions for society. In the quest for sustainable growth, the broader implications of taxing income from wealth will ultimately shape the future fiscal policies in the UK. If anything I've written in my blog post resonates with you and you'd like to discover more of my thoughts about taxing income from wealth, then do feel free to call me on 07434 287 603. And let's see how I can help you.